Welcome to the Techno Fundamental Report for April the 17th. Jamie Dimon was recently interviewed, and he says he expects S&P 500 earnings estimates to fall as companies pull guidance. Well, they're pulling guidance because they don't know what's going to go on with the tariffs. So this is going to be a very interesting earnings season coming up. I mean, we're really just starting to get into it. Now, what I would be paying attention to would be companies that come out. You see, when you announce earnings, when you have an earnings announcement, you announce revenues, you announce profits, but then management also tends to give a guidance as to where they think things will go in the next several quarters or the rest of the year. Well, all these companies are pulling those guidance numbers because there's just too much uncertainty. So the benefit here, or I think the opportunity here is that if companies announce, now remember, it's not the announcement, it's how does the stock react to the announcement. So if you go into earnings season and you see some positive reactions, these could be companies that are discounting a benefit of the tariffs. Now, United Airlines gives two 2025 profit outlooks, calling economy impossible to predict. So it's just basically what I'm talking about. Now, on these tariffs, we have to realize that Trump is rolling the dice here. Now, this economist, which is Milton Friedman, and then this philosopher, Ayn Rand, are big believers in something called laissez-faire, which is an economic philosophy developed in the 18th century that opposes any government intervention in business affairs. So I'm sort of in that camp, even though I'm hoping and really hoping that these tariffs, the gamble pays off, because it could pay off. But at the same time, based on the past, now, we had tariffs back from 1870 to 1913. And that was a very prosperous period for the country, but we were a young country and industrialization was just beginning. But basically the argument here against the tariffs, in my opinion, is government does not to be getting involved in this. This is business, and just let businesses be businesses. Now, we all remember George Carlin, and he said a house is just a place to keep your stuff while you go out and get more stuff. So when it comes to these tariffs, you really kind of have to think about it. Do we really need all this Chinese stuff? I mean, I know people that have their houses and their closets are full of stuff, and then they go rent a separate unit or storage unit to store stuff. Now, the tariffs could mean that if you want to get a large screen TV, you might have to pay $50, $100 more for it because of the tariffs. But, what I'm simply saying is that there's a lot of stuff out there. Maybe we don't need all of it. Now, I've been reading an interesting book called Thunderstruck by Eric Larson. It's all about Giovanni. Gosh, I'm trying to remember the guy's name now. It's a strange name. But anyway, he invented the wireless telegraph. And basically, back at that time, I'm going to think of his name here in a minute, so I'm really apologize. But it's a great book, by the way, and it's about inventing. It's about how this guy had to go through so much trouble to get the invention to work. It was just a major accomplishment. It was kind of like the iPhone. It was, a major, major accomplishment. But the real problem was to get it from concept to being used in society. So if we really think about it, if the tariffs are successful and we need labor to manufacture, perhaps AI and robotics are going to make a tremendous difference. But anyway, it was like basically going from the wireless telegraph, which was a real stretch. I mean, it was the first time anybody had done anything like that. And can we believe that robots are coming and are going to somewhat save the day? Well, we'll just have to see. Jesse Livermore, big movements take time to develop. So what we're dealing with here is a downtrending market that we're going to take a look at. And hopefully it's just going to take some time to overcome this damage, because there's been a lot of damage to the markets. Never buy a stock because it has had a big decline from its previous high. In other words, recency bias is where you go, oh, gee, this was a great one in the last cycle, but we've now had this correction. And usually what these corrections end up meaning is that there's the ending of some group of stocks and the beginning of another group of stocks. So if you've got a stock that's had a big decline, it's going to take a lot longer for that one to come back, but just be aware of that. Now, let's take a look at the market here. We're still in a downtrend. We were hoping to get a follow-through day in here, but the volume the volume was not higher than the prior day, so that was kind of a negative. And then the following day, we got a high volume day sell-off. So we've still got more work to do, but it does kind of look like we're starting to consolidate in a trading range here. So hopefully the worst is over. Now, hopefully the low is in is what I'm hoping for. S&P, same thing. We've got the low here. We've had 1, 2, 3, 4, 5, 6, 7 days of a rally attempt. There is not a rally confirmation yet, but we are in a rally attempt. Very important to understand that. Small caps continuing to downtrend. This is risk on, risk off, and right now it's risk off. So it's basically consolidating. Hopefully can hold in here and then break out to the upside. Now I've been noticing the number of new highs on the S&P, and it's not good. I mean, we started to get some improvement, but as of today, it's just not very positive. The aggression index, let's take a minute, look at that. Now we have the 2 moving averages, and we get something called a death cross right in here. And as you can see, after that death cross, now this was the bear market of 2022, and you can see things got somewhat nasty here. We've got a death cross going now, and things are kind of nasty. So basically, this indicator, which has been a really good indicator for us in the past, is saying this is really not a good time to be getting super aggressive, and you should have cash. And if you do any buying, keep it light. Don't get too aggressive here. Interest rates, however, are starting to come down somewhat. The 5-year is down to 3.9. The power index is about to go below 0, so this is very positive, which would indicate that maybe the Federal Reserve is going to cut interest rates. Now, the 200-day is an important moving average, and all I would say to you is this. If you're below the 200-day moving average, which we are in both of these indexes, the NASDAQ and the S&P, you need to think differently. Just like the aggression index, you don't want to be aggressive here. Now, if we can rally back above the 200-day and get into an uptrend, well, that's when you get aggressive. Now, the volatility index, the VIX, if we go back in history and look at 2008, you can see that was a major, this is the fear index. This was a lot of fear came in. And then back here in the bear market of 2020-22, again, a lot of bearishness came in. So you can see that right now, well, we're here right now, but we did get up to a level that we've only seen 2 times in the recent past. So there's a lot of volatility, a lot of fear. Oil continues to be in a downtrend. You can see here. Now, you define a downtrend very simply. High, low, lower low. That's a downtrend. Tried to consolidate in here, but then we made another new low, and then we're making another new low. So when it comes to energy stocks, I would be very careful right here. Now, on the AAII bull minus bear ratio, which is a measurement of sentiment, this is somewhat good news because everybody is pessimistic. I mean, we're getting somewhat record level readings on bearish sentiment. So everybody's negative, which usually somewhat can indicate a bottom. But the problem comes in with this is a secondary indicator. It basically says keep your ears up, a lot of pessimism out there, but the problem comes in is where things can stay pessimistic for an extended period of time, like back in this period here, you see. So if you have any questions, please let me know. Thank you very much.